we have Mr. Suresh Iyer. He's the Managing Director and CEO at CanFin Homes. Mr. Iyer, good afternoon and thanks for taking the time out.
Good afternoon.
Mr. Iyer, let's talk about growth, how you are seeing things, what is the trend, what are the trends that are playing on ground, and how quickly can we reach the 15% mark?
Sure. See, we've had a good disbursement in the second quarter. And in fact, in the first quarter also, it was good, but we had two zones, particularly, or two states, Telangana and Andhra, which were slightly soft for us. In this quarter, in fact, even the Andhra Pradesh has become positive, and we are seeing good amount of demand across the geographies. Mainly, our demand is coming in the 20 lakh plus segment, where we have seen growth in the 20 to 30 and 30 plus segment as well, across geographies. So that is what is pushing our disbursement growth, which has therefore helped us in improving our AUM growth from 9% to 10% in Q2. And going forward also, we expect that we should be able to continue this positive trend in disbursement, which will help us further improve our AUM growth from 10 to about around 14% or thereabouts in the end of the year.
So reasonable to expect the second half of this financial year will be the same as what we've seen in the first half?
In fact, normally it's a cyclical thing. The first half is about 45% of the disbursement and H2 is normally 55%. That's what is the general trend that is observed. So from where we are, we definitely see that the second half of the year will be much better compared to the first half.
Fair enough. So if you can also give us an idea on some trajectory when it comes to your net interest margins, how are things faring at this point in time?
See, in Q2, we've had slight improvement in our NIMs, and it is at 3.75% is our NIM. And going forward, also we expect that the NIMs will be range bound, and we had given a guidance for 3.5% plus NIM, which we continue to hold.
Right, Mr. Iyer, can you give us an idea whether or not the mix in the disbursement is changing based on the various segments that you cater in at the moment? Are you seeing changes, or are you anticipating any changes going into the next couple of quarters?
See, we had already guided that our salaried segment is around 72% and self-employed is 28%. And we had said that we are a little comfortable even if it goes up to around 30-35%. So we are seeing a little bit of this, which is a conscious call that we have taken to slightly improve our SENP segment. Second, and also our housing segment, we are having the similar kind of a trend that we have a little scope to improve our LAP. So both in terms of the customer segment as well as in terms of a product, we are seeing a slight move towards SENP and a little marginal improvement in our LAP also.
All right. Sir, can you also tell us and give us an idea about the ROAs right now, the return on assets, and is there any scope for a further increase, a rise in here?
See, ROAs, we are at around 2.2, marginally above that. So I guess we had said around 2.1 plus is what we are aiming at, and we will continue to hold the same guidance that ROA of 2.1 plus and ROE in the range of about 17 plus is what we are looking at.
So, investors in general are also curious to know about your plans with respect to branches. So where does it stand right now? The plans with respect to expansion in the number of branches going forward, and what does this mean for operational expenditure?
See, in terms of the branches, last year we had opened 14 branches, and this year we are targeting to add another 15 branches to that. And we are working on that. We've identified mainly branches in the north and the west, because that are the areas where we have a lower presence. About 28% of the business is coming from the northern and western zones. So we want to slightly improve on that. We are looking at tier 2 towns. So that we are looking at, these will help us more in the self-occupied residential property, mainly P plus C or plot plus construction kind of cases. That is what we are looking at in terms of the expansion, in terms of the branches.
All right. And so moving on, also want to understand this, there is some feeling on ground, and it's not just for your company, but in general, when it comes to the sector as a whole, that there could be a slight increase in delinquencies going down perhaps in the next few quarters. So what is your own personal reading here?
See, we have had, at least in Q2, our gross NPS have come down from 325 crores to 320 crores. And in fact, we had last year the impact of restructured portfolio, but now we are seeing that even in the restructured portfolio, we are seeing some improvement, and we are witnessing recoveries in the restructured pool also. So going forward from a 0.88% gross NPA, by the end of the year, we are working towards somewhere in the range of 0.8 or below that. That is what we are targeting. So I don't see that NPA should go up from here, or should see any further deterioration or any deterioration for that matter.
So that means that we won't see too much traction in increased provisioning going forward either. Would that be a fair assessment?
That is correct. We are looking at a normal year in which we are looking at about 10 to 12 bips in terms of credit costs. That's the guidance, and I think we should be there.
All right, sir. So there is hope, I wouldn't say expectation, but certainly hope that the Reserve Bank of India will go ahead and cut interest rates, and the expectation once again is over the course of the next 6 months, or rather hope once again. So under those circumstances, how long does it take before a company like yours can translate those into further cut rates?
See, we have a quarterly reset policy. So as and when we experience a reduction in our cost of borrowing and weighted cost of borrowing, we will be passing it on to our customers. So it's an annual, as we earlier had an annual reset, now we have a quarterly reset. So the transmission will be much faster for the customers.